Hey there, family. Just wanted to drop by and say good morning to you, and also stop and answer a question, the question of the day about insurance. When it comes to insurance, some people would like to know whether they should buy term life insurance or perm life insurance. Term insurance is that kind of insurance that you buy that's good for a period of either 10, 20, or sometimes 30 years. But at the end of that period, the policy would expire, or you'd have to have it renewed at a higher rate. But it expires and it goes away. But that term insurance, when it comes to the premiums, they are always a lot less expensive than the permanent insurance policies. That's why they're so attractive to people. People will tell you that when you save money, you save money when you buy term insurance as opposed to perm insurance, and the money that you save, you should invest it in some other vehicle like IRAs, or put it into your 401k or something like that. So the whole idea about term insurance is that it's cheaper. It is for only a period of time. The money that you save by buying the term insurance, you invest that difference in some other investment vehicle. So what should you do? Should you buy it, or should you buy the perm? As with anything in life, it's not that simple. It's always complicated. There's always other issues you got to think about. For instance, let's say you are a person who is not very disciplined. We all start out with good intentions. But let's say you intend to buy that term insurance and invest the rest. But you never do. You never get around to it. You end up spending that money that you save on other things that go away, like food and clothing and all that stuff. So the money that you could have had if you had invested the money properly, you don't have. So when the policy expires at the end of the 10 or 20 or 30 year period, you don't have any death benefit, or you don't even have any money there to provide for your family if you do leave this world, before they do. So things you got to consider. Because when you look at term, you have to also realize that 97% of the insurance policies out there that go to the point that actually pay a death benefit, 97% of those are some sort of permanent insurance. So that means that out of all the policies that pay death benefits, only 3% of those are term policies. That means that when you need the insurance policy the most, term insurance is not going to be there for you. So you would have had to have made sure that you had done your proper savings and been disciplined and saved or invested that money that you saved when you bought the term policy initially. So if you're disciplined and you can do it, then term is okay. It's good for you. Another thing you got to consider is that we all, at some point in our lives, are going to need an emergency fund. We're going to need money to pay for a down payment on a house. We're going to need money to put our kids through school. We're going to need money that we need to pull out. Where do we get it from? If you were disciplined enough to buy the term and invest the rest, then you would have put it into some sort of IRA or some sort of investment tool. But when you look at those qualified plans are going to hit you with a penalty anytime you try to go in and take money out prematurely. It's going to hit you with taxes when you go in and take money out. So when you take money out from those plans that you invested in, good job, they're going to hit you with two things: penalties and taxes. So let's say you need $5,000. You go in your investment account, pull out $5,000, but you don't actually get $5,000 because off the top, 10%. So you get $4,500. Of that, you're also going to have to pay taxes on that too. So you need $5,000, but you're not actually going to get $5,000. Flip side, you are the same conscientious investor, responsible person. Instead of term, you bought permanent insurance, which builds up cash value on the inside of the policy. And depending on what kind of permanent insurance you get, the interest that you earn on that will be a lot higher than, of course, it's going to be a lot higher than any regular savings account that you save money in. But let's say that you do get the whole or permanent insurance and you need money a few years later. After you get it, you need money. You need to pull it out. Life happens to us all. What do? You can do two things. One, you can go into your account and take out a loan from your money. So when you pay it back, you're paying back yourself. But in all reality, when you take out a loan from a permanent insurance policy, you don't really even have to pay that back. It can be a loan that you never have to pay back. And we can talk about that when we sit down and discuss it. But also, when you take out money, you can take out a loan, or you can just simply withdraw your funds from that account. A couple of things you got to remember. If you did this from any other type of investment vehicle, you would have had to pay taxes and probably a penalty. When you take money out from your whole or your permanent insurance, there is no penalty and no taxes. It's tax-free money. So if you need $5,000, guess what you're going to get when you pull it out? You're going to get $5,000. So do you buy term or do you buy perm? A lot of complicated issues, a lot of complicated questions that go into that would have to be answered. But I would advise that if you have those questions in your mind, that we sit down and talk about it as soon as possible. You can reach me at yourdfwinsuranceagent.com. That's yourdfwinsuranceagent.com. Go through there and you can even request an appointment with me that we can sit down and talk about all these issues and more. Don't hesitate. Don't wait. Get it done today. Thank you. Bye.